Welcome back to our weekly market wrap-up. The Indian equity market ended the week on a cautious note as profit-taking and mixed corporate earnings weighed on sentiment. Market movements were volatile through the week, reflecting a blend of strong manufacturing data and slightly slower services growth. While select stocks managed to outperform, overall sentiment remained subdued, with investors staying watchful ahead of upcoming macroeconomic data and global cues. So stay tuned, and by the end of this video, we will unpack the key drivers behind these movements and what lies ahead. For the week ended Friday, 7 November 2025, the S&P BSE Sensex declined 722.4 points, 0.9% to close at 83,216.3, while the Nifty 50 fell 229.8 points, 0.9% to settle at 25,492.3. The BSE Mid-Cap Index edged up 0.3%, while the BSE Small-Cap Index slipped 0.1%, highlighting a largely range-bound performance across broader markets. Markets began the week on a firm note, supported by steady Q2 earnings and positive cues from global peers. However, Tuesday's session saw sharp losses as investors booked profits amid weak global sentiment. The midweek holiday for Guru Nanak Jayanti paused trading activity, while Thursday and Friday witnessed mild declines as caution prevailed ahead of major macro updates. So stay tuned as we break down the key factors behind this turnaround and explore what could drive the markets in the coming week. Let's take a look at this week's key economic updates. India's manufacturing sector continued to show strong momentum in October, with the HSBC manufacturing PMI rising to 59.2 from 57.7 in September, among the fastest expansions in recent months. The growth was driven by GST relief measures, productivity gains, and increased technology adoption. Meanwhile, the services PMI eased to 58.9 from 60.9, reflecting softer demand and weather-related disruptions. Despite the moderation, overall activity remained solid, with the composite PMI inching down to 60.4 from 61.0, indicating sustained but slightly slower growth across the economy. Globally, in China, manufacturing activity weakened in October, with the rating dog PMI easing to 50.6 and the official NBS PMI slipping to 49.0, signaling contraction. Exports fell 1.1% YOY, reversing an 8.3% rise in September, while imports grew 1% YOY, down from 7.4% the previous month. In the US, private sector hiring improved modestly with 42,000 jobs added in October, while the ISM Services Index rose to 52.4%, pointing to steady expansion. However, layoffs surged to 153,000, nearly 3 times September's level, raising concerns over emerging labor market weakness. Among this week's top gainers, Navin Fluorine, 119.9%, jumped after declaring a dividend and showing strong recovery momentum across chemical segments. Optimism around specialty chemical demand also aided the rally. CCL Products, 119.8%, soared to a 10-year high as the company beat estimates and delivered robust export-led growth with strong volumes. Number 3M India, 19.1%. Advanced steadily on margin expansion and healthy quarterly results, boosting confidence in its industrial and healthcare businesses. On the downside, the top losers, Reliance Infra, 19.3%, tumbled to a 52-week low amid continued selling pressure and weak investor sentiment around the infrastructure segment. So NetWeb Technologies, 16.4%, declined after a sharp run-up in previous weeks, with profit bookings seen despite strong quarterly growth. Reliance Power, 15.8%, slid on persistent losses and subdued outlook for the power generation business, extending its recent underperformance. In the unlisted space this week, unlisted market activity gained momentum this week, led by long-awaited IPO developments and renewed interest from institutional players. SEBI chief Tuhin Kanta Pandey confirmed progress on the long-awaited NSE IPO, signaling a key milestone for India's largest exchange. SBI and Amundi will also divest a 10% stake in SBI Mutual Fund via IPO, underscoring rising interest in financial listings. Meanwhile, Volatile is planning an IPO at a $3.6 billion valuation, highlighting strong investor confidence in India's edtech space. Unlisted names like NSE, Volatile, Oyo Rooms, Tata Capital, and NSE continue to see steady investor demand as private market appetite remains firm. Reach out to explore more opportunities in the emerging unlisted space.
That wraps up this week's market highlights. Here's what to watch in the week ahead.
Indian equities enter the new week on a cautiously optimistic note, with investors closely tracking the ongoing Q2 earnings season, inflation data, and key global developments. While domestic indices have shown resilience, global volatility, especially from the US tech sector and trade headlines, could influence near-term sentiment. In India, key focus will be on CPI data, 12-NOV, which eased to 1.54% in September, the lowest since June 2017 and below the RBI's 2% limit, hinting at a dovish policy stance. M3 money supply for 31 OKI will also be released, after rising to Rs2.80 to ICE 952 billion earlier in October. Later in the week, WPI data, 14-NOV, is due, with September inflation at 0.3% YOY, showing mild price pressures. Globally, focus will be on China's October industrial output and retail sales, 14-NOVI, after September's 6.5% and 3% YOY growth respectively, and FDI down 10.4% YOY, reflecting weak sentiment. In the US, key data on Thursday, 13-NOVI, includes API crude inventories, last up 6.5 million barrels, and October CPI and core inflation, both at 3% YOY, for cues on inflation and Fed policy. With inflation readings from India, the US, and China in focus, markets may witness bouts of volatility. However, steady domestic earnings and cooling input costs could help maintain stability, with long-term investors continuing to accumulate quality stocks on declines.
That's all for today. Stay connected with Tikona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on tikonacapital.smallcase.com to know more. Don't forget to like, comment and share. See you next week.